Hello friends, hope you all had a wonderful holiday and my best wishes for a great 2021. Today I wanted to share with you a stock that I bought recently. The company is Blade Urban Air Mobility, which can currently be bought by investing in ticker symbol EXPC, which is a special purpose acquisition company that has entered into a reverse merger agreement with Blade. So the actual company we'll be analyzing in this video is Blade, as we will eventually own the stock of Blade by buying EXPC now, once the merger formalities are completed in the upcoming months. As mentioned in some of my previous videos, this is no different than other popular SPAC-sponsored companies like ChargePoint, Workhorse, and Desktop Metal. EXPC is currently trading around $11, so in the short to medium term, I think the risk is very low as the stock price cannot go much below $10 until the merger is completed sometime in mid-2021. But I also believe the company has far more potential in the long term, so let's now discuss more about the company and their business model. Blade is basically a platform for passengers who want to travel from one place to another via helicopters without spending thousands of dollars per trip. Currently, Blade offers short distance flights mainly in the New York area, airport transfers, and medical transportation services. They also offer services in India through a joint venture partner. Blade offers its services by partnering with helicopter operators, very much like how Uber partners with private car owners. So basically, the company is more of a demand aggregating app, and their main focus today is in building a brand which the consumers would recognize and use as their default go-to platform as the urban air mobility space continues to grow in the coming years. The advantage that Blade has here is that they have an asset-light model, and it just manages ticket sales, branding, and customer service, while the helicopter operators would be responsible for owning and operating the helicopters. Blade also stands to benefit by branding the aircrafts, which would help in building their brand image and popularity. Another key point to note is that Blade doesn't need to pay the helicopter operators unless a customer uses their services. So that reduces the risk of hefty fixed cost during years like 2020 when they were not operational for a few months. Blade has been in business since 2014 and has already served over 200,000 customers, so it is certainly not a newcomer in the space. As you can see in this slide, Blade has the first mover advantage in the sector, and they are also expecting significant growth in the coming years once electric vehicles, termed as eVTOLs, are deployed. We will discuss more on eVTOLs later in the video. In terms of their business viability, ultimately it will come down to the value they can offer to their customers, and as you can see here, their prices are pretty reasonable when compared to premium ground transportation. Given the time savings on offer, especially in the congested New York region, their $195 airport transfers can be expected to be well received by their customers, and they also offer $95 seats to frequent flyers, which would be favored by corporate clients and business executives. Since 2014, Blade has managed to grow their passengers and revenue at an exponential pace, and since this sector is still at a very early stage, we can expect this exponential growth to continue for several years to come. It is also very promising to note that before operations were affected in 2020, their revenues and passenger growth continued until March and again has started recovering nicely since October. Moving on, we can see here the company's expectation for future growth, which they have planned in two phases starting in 2021. So in phase 2, they aspire to fortify their current market share and also enter into additional markets. In the longer term, around 2025, Blade expects to transition to eVTOLs, which should allow them to reduce their prices even further and expand their customer base. In addition, venturing into international markets is also expected to be a long-term growth driver. Let's now look at eVTOLs briefly to better understand the company's prospects for phase 3. So eVTOL stands for Electric Vehicle Takeoff and Landing Aircrafts, and as the name suggests, it uses electricity instead of fossil fuels. So similar to the electric vehicle boom that is currently happening in the ground transportation sector, it is expected to also transform air mobility in the near future. This would give Blade the opportunity to expand their revenues and margins significantly. And even though certification by the Federal Aviation Authority is expected in 2023, Blade has conservatively estimated to begin seeing the benefits only from 2025 onwards. And for people skeptical about the viability of this technology, it should be noted that over $5 billion has already been invested in this technology by industry stalwarts like Boeing and Airbus, which is also an investor in Blade. Now let's look at the details of the SPAC merger transaction to understand the valuation that will be assigned to Blade at the close of the merger formalities. So the company is being valued at $825 million, of which $375 million would be available as cash to expand Blade's operations. Blade is planning to utilize this cash to invest in growth drivers to enhance their current market share as well as expand into other markets. The biggest investment planned is for acquiring heliports in the northeast regions, as this will help the company avoid paying recurring landing charges for these heliports, which is expected to immediately improve the company's margins. And in terms of Blade's financial projections, as we can see here, from where they are in 2020, the company expects to continue increasing their revenues in Phase 2 on the back of the strategic investments and organic growth, and even faster expansion in Phase 3 from the anticipated electric vehicle adoption in 2025. So as you can see here, the company also expects to be profitable starting in 2024 with $81 million in profits and even greater profit growth in 2025 and 2026. With all this information, let's now evaluate if this is a good investment opportunity at the current price of approximately $11. As we saw previously, the merger values Blade at $825 million, which was at a price of $10 per share. So by paying $11 now, we will be investing at a valuation of around $908 million. And even though the management is expecting to be profitable in 2024 with $81 million, let's be a bit more conservative and assume that they won't get to this profit level until 2025. And since the company would still be at a very early growth stage in 2025, we can at least expect the market to value Blade at a 25 price to earning multiple, which would make its valuation over $2 billion in 2025. So if we invest now, in 5 years, we can expect to make a 100% return, which is amazing. I think it is also not unreasonable to expect a 50 price to earning multiple in 2025, in which case the returns would be over 200%. As a matter of fact, unless the overall market crashes in the first half of 2021, we can even expect the stock price to double in the next few months itself, as more and more investors see the opportunity and also speculation builds up before the merger date, just like other SPACs we have seen in recent times. So either way we look at it, the risk to reward seems to be very favorable at the current stock price. One thing to keep in mind is that there is always a higher risk in investing in these unprofitable small cap companies, as the stock price can crash significantly if some bad news comes out or the management fails to perform as expected. For this reason, I will still treat this as a highly speculative investment and will only invest 2% of my portfolio into the stock. And as an exit strategy, if the stock price doubles in the next few months, we could sell half of the shares and can get back the entire capital invested. With this, we can hold the remaining shares for the long term without any risk of losing our initial capital. If you followed my previous videos, I've successfully implemented this strategy in many of my recent investment recommendations like Helion, ChargePoint, and Celsius Holdings, where I've already sold half of my position with a 100% profit, and I still continue to participate in these growth stories without any risk of losing the initial capital. Coming back to Blade, please let me know your comments on whether you're also bullish on this company, and always remember to do your own due diligence before investing, as I am not a licensed investment advisor and my videos are only meant to document my views on various investment related topics. Hope you enjoyed this video, and if you found the information useful, I would really appreciate if you can please leave a like and subscribe to my channel. Have a great day, and I'll see you in the next video.